Welcome back to another video here at Fiscal Voyage. I'm Felix, and today's video we're going to talk about Broadcom. Broadcom was suggested by Dirk. Thank you, Dirk, for commenting and suggesting Broadcom in a previous video of mine. I actually own shares of Broadcom, and I think it's interesting that if you watch the whole video, I'm going to provide you a fair value price, and from there my recommendation of the company. I actually purchased shares previously and sometime in March. And I think it still has some value at current prices. So with that, let's start the stock analysis of Broadcom and determine if the company is a buy, hold, or sell at the end of this video, and I'll provide you a fair value price. So let's start. Alright, so here's a stock analysis on Broadcom Inc. Could be found in the New York Stock Exchange as AVGO. Broadcom is an American designer, developer, manufacturer, and global supplier of the wide range of semiconductor and infrastructure software products. Broadcom products offerings serve the data center, networking, software, broadband, wireless, and storage and industrial markets. You're probably not aware of it, but you most likely use Broadcom products in your home and offices. The electric technology equipments, for example, broadband modems, the Wi-Fi, Bluetooth, GPS. They make chips for cable modems, the Ethernet NICs, Ethernet switching, and fiber optic products. So let's start with the fundamentals of the company. Revenue grew at a compound rate of 30.3%, which is outstanding, tremendous here for the past 10 years. And for the past 5-year average, revenue grew at 34.9%, which is higher than the 10-year average, which is outstanding that they continue to grow at a great rate. Net income grew 23.3% from the 10-year period, and the past 5-year average at 18.9%. So net income has been decreasing at that front here. S&P credit rating at BBB minus, which is still investment grade, but the lowest investment grade there is. So that's a little something to consider there. Operating income grew at 27% from 2010 to 2019, and earnings at that same time period grew at a whopping almost 30% at 28.8%. And the past 5-year earnings has decreased a little bit, but not too much, at 24.1% 5-year annually growth rate. If we continue with the fundamentals, last year they had earnings of $21.29 a share. Net margin came in at 11.9%, which was lower than 2018, which was 58.8%. Return on equity is quite low at 10.5%. Debt to cap is moderately high here at 61%, and the current dividend yield at 5%, which is real good yield. The only concern here I have is the debt and the dividend payout ratio is at 60%. The company has been growing dividends at an astounding rate of 55.5% for the past 5-year average, and the most recent increase was 22.6% in December. So it's going to be interesting to see the dividend increase later this year. I'm probably thinking the low double digits, but let's continue here. They have a 10-year growth rate of 10 years of growing dividends, and the charter rule of 60.5, which is the current yield plus the 5-year growth rate, which is unheard of here. 60.5 charter rule is outstanding, and they have a 5-year dividend yield average of 2.14%. So at current yield of almost 5% is very good here. Future outlook 2020, analysts expect earnings of $21.47, which is slightly higher than 2019 of $21.29, and they're expected to pick it up at 2021 to $23.94. CFRA has a projected 3-year earning growth of 9%, and my dividend drill return model has a projected annual return of 11.3%, which is great. Actually, I'd like to see companies at around 9% or higher, and we're getting here 11.3% annual return. Currently, the PE forward PE is at 12.2 versus the 5-year PE average of 14. So this is a good indicator, plus the dividend yield is a good indicator that the company is undervalued here. So let's see here. If we look at the fast graph, the black line is the monthly closing price, and the orange is the earnings with a multiple of 15, and the blue line is a normal multiple of 14. 4.11. As you can see here, the black line is under both, which is a good indicator that the company is undervalued based on a 14 multiple to earnings and a 16 earnings multiple. So this is a good indicator. As you can see, for 2021, earnings projected to grow at 12%, and then 2022 at 6%. So they're still growing earnings, but it doesn't look like they're going to grow earnings at that 20% plus rate. So we look at our fair value prices. CFRA has a fair price at 249, Morningstar at 310, Fastgraph, as we saw, 303, and Yahoo 296, and my dividend discount model analysis at 476. The dividend discount model analysis I was very conservative here. I used a 7% growth on dividends going forward, and as we saw, the company has been growing dividends at a high double-digit rate, so I've been conservative with this here. Averaging out to 5, we get a fair price of 327. Currently, the company could be bought at 267 and 19 cents. That means the company is undervalued by 22.4%. With that, I have a buy recommendation of the company. I currently hold shares. I bought shares during that market downturn around mid-March, so I was happy with that purchase. The high dividend growth rate is the positive. It has 10 years of dividend growth. A little concern is the 60% payout ratio and the BBB minus credit ratings. But the company has tremendous growth in the past 10 years, and it's slowing down, but not dramatically. It's still, growing at a nice pace, and it makes chips, which is the future. Most product would be the Internet of Things. Everything would be connected. So nothing much to not like besides the payout ratio and the slightly high debt. But with that, I recommend it as a buy. I currently hold it, and I would love to purchase more shares at a dip here. So with that, if you have a company that you would like to see next, please let me know the name of the company and ticker symbol in the comments. Thank you for watching, and if you find this video informative, please hit the like button and subscribe to my channel for more videos such like this. Don't forget to check my portfolio, which is the link in the description below. Stay safe, make sure you wash your hands, and thanks for watching, guys. Make sure to hit the like button.